Bill, I know the Fed might be behind the scenes looking at what this fiscal policy is going to look for Trump. I'm wondering what you're thinking about when Trump has talked about blanket tariffs up to 60% on China.
Yvonne, I'm so
how
glad you asked that
could that
question.
actually be?
Yes, I hear so much talk right now, even among economists. Oh my God, the inflation that's going to come because of these Trump tariffs is going to be enormous, and it's going to be the end of the world. I have to say, if you look back on what's happened after Trump put in tariffs in 2016, and after Biden even widened those tariffs during his administration, what happened to the CPI? Nothing. The best studies show that the rise in inflation due to tariffs was about a quarter of a percentage point at best. And that's over a 3-year period. Now, you can say, well, we've got to get 100% tariffs, not these tiny little ones that we've had before. But I think one thing to remember is Trump is a businessman. Everything is negotiable. And I think you will see him say, okay, 100% tariffs on Chinese goods. And if you still continue to import them, I'm going to make them 200%. That's the first round. The next round is going to say, okay, what are you going to give me in return? Can you put jobs into the United States? Can you invest in the United States and create more jobs? If so, you escape my tariffs. And I think that's how the procedure, the process of negotiating will go. If you are able to bring jobs to the United States, you will be exempt from the tariffs. And it's almost as simple as that.
Bill, we can't look at tariffs in a vacuum. I think the president-elect has brought up tariffs in the broader context of things like tax cuts, for example. So let me ask you, if tariffs are not in themselves inflationary, what is, and we saw that in the last fiscal push, is fiscal spending. How much do you think spending goes up, number one, and do you think the budget blows out?
No question, we're going to be on an explosive budget deficit path. As Chair Powell said, where the debt level is now is sustainable. The path itself going forward is not sustainable. And with President Trump's spending agenda ahead of him, unless growth really picks up and pays for the rise in the deficit, which I doubt right now, because the kind of growth that we need is going to be enormous, we will see an explosion in the deficit. But explosion meaning from what, 4 or 5% to about 7 or 8%. The debt levels are projected to go up to about 120% of GDP. That's much less than what China has right now, for example. So, and much less than what Japan has. So in terms of whether it's manageable, it can be manageable over the next, say, 5-year horizon, but certainly it cannot be allowed to proceed as unrestrained, because that will signal the threat to the reserve currency status of the dollar, and also a lot of crowding out and high inflation to come.
Bill, since you mentioned China, I've got to ask you, there's a narrative out there right now that with a Trump win, that China's going to have to deliver a bigger fiscal package to boost its economy and offset the potential threat to tariffs. Do you assume that as we lead to the wrap up of this MPC meeting and what we could get out of this package later on today?
China's domestic economic outlook is really quite poor right now, despite the amount of stimulus they put in place. I think the reason why the fiscal stimulus hasn't worked so far is because it's really oriented toward the supply side. President Xi is absolutely convinced that higher quality production will produce higher income that will then stimulate demand. But I want to remind you, John Maynard Keynes in the 1930s said, supply creating its own demand is not going to work to get an economy out of a depression if the confidence in the economy isn't there. And right now, neither entrepreneurs nor consumers are confident enough to start spending. So I think that the President Xi really has to redirect the fiscal stimulus more toward the demand side and less emphasis on the supply side. I think this John Maynard Keynes told everyone, Say's law just doesn't work. Supply does not create its own demand.
Bill, it's great to have you. Thanks for wrapping the week with us. Bill Lee, Chief Economist and Executive Director at Milken Institute. And what a week it's really been. Still ahead.